talking then.
Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. I'm Mark Gardner. This is Phil Deloughery. Sitting next to me, stocks were lower in the US overnight ahead of key inflation data. We've got that CPI and PPI data over the coming days, which everyone's obviously hanging on. But just give us a bit of a wrap up yesterday from, obviously we're in earnings season at the moment. What were the key moves yesterday?
Well, basically, ASX 200 closed up basically 0.2%, and over a 3-day period, that's been a 0.25%. Technicals are still a strong buy on the hourly, the daily, and the weekly. Futures currently down 37 points, so we're obviously looking for a weaker opening. The board standouts were Life 360, basically down 20% on monthly active users, growth slowing. Helia up 10.2% with a special dividend and buyback. SGH down 10.3 on soft 27 guidance, and Emotive 13.5% down, SCA flat. Ian's expanded bird flu lockdown to all states. No commercial cases yet, but free range at risk.
I mean, that could be, I mean, we're obviously dealing with inflation as it is.
Yeah.
Chicken's your staple at home.
The bachelor's handbag.
Yeah, the bachelor's handbag.
I'm like, well, I actually get one every day. And I've seen them go up from $9 to $13 to $14.
There you go.
Yeah.
And Newmont was up yesterday as well on the back of, I think they did a deal with Barrick Gold as well, and obviously the oil names and CSL up and ResMed up as well, but no real earnings there overall. So
I'll just quickly add to one thing, Mark. Sorry. Coal's been quite a standout in this sort of whole geopolitical situation around. We've got WiseTech up about 5%, I think, over the weekend. Yancoal up 5%. So this sort of
Whitehaven, you mean? Not
Whitehaven. Sorry. Apologise about that.
No worries. We've got the Aussie on the strong buy and all the technicals at the moment. Nasdaq as well. S&P slight. I mean, that's just the hourly. Probably not much to pay attention to there, but probably just cooling ahead of this. Apparently, volume was down. Is about 2.5 million lots under normal, which is pretty. Billion shares. So 15 billion shares traded versus the 20-day average of 17.7 billion shares. But some are positioning in the States.
CPI.
And the CPI as well, So we had Google off, Amazon off, Apple and Broadcom. We had a little bit of joy in some of the the chip stocks. But look, overall, it's a fairly mixed heat map, I've got to say. We had CoreWeave come out with a really good result after the market. And look, I think it was up around about the 12% mark, 13% in the end. And that's that data center as a service thing that we've been talking about here at MPC for a little bit. As you can see in the middle of the heat map there, just below Amazon's also those chip manufacturers and Foundry as well. In terms of gold and silver, continuing to rally up sort of 7.5 to 10. Crude, this one's yesterday's. So, but just to give you a quick idea, crude's up 11% for the week, but it was only up 1% overnight. Coal was fairly flat, but up 4%. Gold and silver drifted off a little bit, actually, only up for around about 4% for the week. Uranium still doing pretty well, up about 5.29, up 2% overnight, over the course. So apologies for that. ASX today, mate, what have we got on?
Well, basically the big one today is Australia's favourite bank, CBA, and also the world's most expensive bank by all metrics, but that really doesn't matter anymore because it's how heavily it is linked to the ETF. So,
well, what were we saying this morning? So 12 cents every dollar goes in super, and then 10 cents of that goes into CBA.
So basically all the short sellers out there have been burnt. And just sort of, it's a great company, but we're interesting to see their mortgages, applications. You assume they'd be greatly reduced.
They did flag, a potential, they're reclassifying some of their loans and arrears as a different metric. So, SEEK might be interesting. Computer share, obviously benefiting from higher long bond rates, but computer share probably, I'm a little bit concerned about that long term, just with all these prediction markets coming. All of these new settlements on the blockchain and all this sort of stuff.
It seems a bit old school, doesn't it?
Yeah, but they do benefit from higher rates. So I would imagine they're not going to go too bad. AGL, Suncorp, Seek, I mean, various solutions, it could be quite whippy as well.
It's had a good run, actually.
Yeah.
It's had a really quite a good, if you look on the chart, yeah. So, I mean, that'd be an interesting one, yeah.
And then, but I mean, look, all eyes will be on CBA. If anything's an indication, it'll probably, it'll disappoint.
Yeah.
It won't be able to justify the valuation.
Yeah.
It'll open lower and just grind everyone out over the course of the day.
Correct. That's how it's normally performed over most reporting seasons.
Yeah, because I mean, most analysts have got it at fair value around about 120, and here we are, what, 180?
Yeah.
Like it's, but 10 cents of every dollar going in there.
Just one more thing, Mark. Sorry.
Yeah.
Suncorp was one thing to note. I've just noticed that's actually been very weak on the actual the 5-day charts.
Yeah. Okay.
And look at all the insurance companies, especially OIAG, and they
took a bit of a hit yesterday. 3%.
And a lot of the insurance companies really been sort of copying it. I think also QBE. So that's an interesting thing to keep an eye on. So that could be an interesting one to watch.
Yeah, I mean, look, overall, I'm really quite liking these, obviously, these data center as a service. I mean, that may benefit, that move in CoreWeave overnight may benefit Megaport potentially over the course of the day. Obviously, the slide we got up here at the moment, if you obviously listen to the podcast, we had the full crew on Friday. That was one of the best weeks since April overall, but I think like coming up and then in the coming days, it's just going to be all eyes on on that CPI. We had RBA yesterday in Australia. We rallied on the back of that. Basically, it was not it was a hawkish hold, but it was not quite as hawkish as what everyone was expecting potentially. And obviously, the reason we mentioned that Ingham's thing at the start is we've done pretty well to not have pretty bad inflation because diesel's tied to everything, but chicken as well is not going to help. And obviously farmers haven't planted crops because of diesel and things like that. So, and then look, tomorrow we've got ANZ, Telstra, and Transurban, which I mean, bit of a snooze, I would imagine overall for that, but and John Deere's one that I quite like generally. It's been one of my favourites, but more becoming a data center. Data science company rather than like the amount of technology these guys are bolting onto all these tractors and things is absolutely amazing. And for anyone who wants to go and have a look at the John Deere website and look at their case studies, and or have a look at Clarkson's farm. They saw what they did on Clarkson's farm this season as well. It's pretty impressive what they can do now with all of this stuff, and they are increasingly becoming a technology company. QBE, another one of the insurance companies at the end of the week as well.
It's been weak as well the last couple of days.
Yeah, so it'll be pretty interesting, but we don't expect a huge amount out of today. Obviously, SPY down around about 40 overall. You can go and get your MPC earnings calendar and get all the expectations and things. Just go to mpcinvest.co/ASX earnings. It's not case sensitive, don't worry about it. And you can just hover over, you get the expectations, and you hover over the little plus signs there. And you get which ones, what outside of the 5, largest market cap, which ones are going to, which ones overall are going to report that day. But we're seeing CBA getting reports here, 10.9 billion profit, but warns an economic growth slowing. So that's just the first headline from the Fin Review. The net interest margin of 2% or 2.05 for 3 basis points. So overall, we'll just see what the market reaction is outside of that today. And the operating income grew by 6.2, faster rate than the expense growth, and housing credit of 7.5% on the year, expected to fall between 5. So business credit growth of 10.8 is forecast to soften as well. So they're just the initial headlines overall. But we'll obviously have a bit of a look on the socials later on to get a little bit more detail on Australia's biggest and the world's most expensive bank.
There we go.
Thanks for joining us this morning, and we'll catch you tomorrow.
Thank you, and please no rush on the chickens. Just leave a couple there with the whole England. See, that's my staple diet. See, no, there's a rush on toilet paper. Don't do it on chickens now.
No, well, I don't think there'll be a rush on chickens if they're getting bird flu. But
they won't never be cheaper, though, will they? No, nothing ever goes down.
All
anyway,
right. Thank you.
On that
Catch
note,
you later.
See